Would you rather fight the enemy that you know today, or would you rather fight the unknown enemy in the future? Now you have the information to make that decision. What's good, family? Welcome back to another episode of Tax-Free Living. Today's episode is one that I wish I had the answer to a long time ago. So my goal in giving you all the strategy of this episode is me wishing that 21-year-old me had this information, because I did not. But you will have it because you tuned into this podcast and this YouTube channel at the right time. That being said, can you please hit that like button, hit that subscribe button, and hit that share button, and we'll get right into the title of today's episode. Let me check this. There we go. All right, so the title of today's episode is Traditional IRAs versus Roth IRAs. Which is best for you, right? Because it depends on who you are, where you are in your life to get this answer to this question. So I'm excited about this episode because so many people have this question without having the answer. So before we get into is traditional better, is Roth better, like what is an IRA in the first place, right? Because at 21 years old, I didn't know what an IRA was. So an IRA stands for Individual Retirement Account. So an IRA is an investment account that you can contribute money to, and it will grow in the future, and you can use it later for retirement. And the beauty about IRAs, they either give you a tax advantage today, or they give you a tax advantage in the future, but regardless, they both give you tax advantages. And in my opinion, and again, this is not financial advice, the first $6,500 that I earn per year goes to my IRA, because I see a lot of people investing in regular brokerage accounts with no tax benefits before maxing out one of their IRAs. And it drives me crazy. Why would you invest in something with no tax benefits before investing in something with tax benefits? So personally, my first $6,500 every year goes to my IRA, and it should go to yours too. Now, we'll talk about which one is better. Obviously, I use a Roth, and I'll tell you all why in a moment. So what is the difference between traditional and Roth when it comes to IRAs, right? So first things first, the max in 2023 that you can contribute to an IRA is $6,500. Now, you don't have to contribute the whole $6,500, but that's the max you can contribute. So if you only got 1,000, do 1,000. If you only got 3,000, do it 3,000. But you can't do more than 6,500 this year unless you're over 50. Then you can do 7,500. That's the contribution limit. Now, what is the difference between traditional and Roth? So let's start with traditional, okay? The way a traditional IRA works is you make the contribution today and you get a tax deduction today for the amount of money contributed to that account. So in 2023, if you max out your traditional IRA with $6,500, you get a $6,500 tax deduction for doing so. Like, isn't that amazing? You get rewarded for investing in your future. Not only is that $6,500 gonna grow, you get a tax deduction, putting more money back in your pocket this year for investing in yourself, investing in your future. That's why it just makes no sense to me why people wouldn't take advantage of this account. So that's how the traditional works, really simple. So how does Roth work? The way a Roth IRA works is you make the contribution today. So if I make a $6,500 contribution to my Roth IRA today, I get no tax benefit. But that money is never taxed in the future, okay? That money is never taxed in the future. And not only is that $6,500 I put in not taxed in the future, the earnings from that money is never taxed in the future. So I might put in $6,500 today, but 20 years from now, it might be worth $100,000. And that whole $100,000 is not taxable to me, right? So the difference is, traditionally, you get the tax deduction now, but you have to pay taxes in the future when you take the money out. With the Roth, you get no tax deduction today, but that money grows tax-free forever. Which is better for you? Well, there are quite a few things to consider before answering that question. One of those things being Do you plan on making more money today, or do you plan on making more money in the future than you do today? In certain scenarios, depending on who you are as a person, it's gonna change. So if you're somebody who plans on retiring early and living off the money for your retirement for the rest of your life, and you plan on like making less money in the future because you're retired, it might make more sense to go traditional, because you will get the tax deduction today while your tax bracket is higher, right? And then you will pay taxes later when your tax bracket is lower. But if you're somebody like me who plans on making more money as time goes on, and honestly, if you're a person who honestly never plans on retiring, like I don't ever plan on retiring. I love what I do. So I'm gonna be working until they put me in the grave. So due to that fact, I prefer a Roth IRA, because if I'm gonna be in a higher tax bracket later, I would rather not take the tax deduction today and take the tax deduction in the future while I'm making more money and therefore in a higher tax bracket. So that is one major question to consider. Now, the second question to consider is, do you believe that tax rates are gonna be higher today, or do you believe that tax rates are gonna be higher in the future? Nobody knows the answer to this question, because I believe the highest tax rate we've ever seen in the past is like 90%, right? And today, the highest tax bracket is what, 39%? Let me actually look that up right quick. Got my iPad right here, y'all. I'm gonna be right at all times, okay? So the highest tax bracket in 2023 is 37%. Highest earned income tax bracket is 37%, right? So it could be higher in the future, or it could be lower, right? And the question you have to ask yourself, would you rather fight the enemy that you know today, or would you rather fight the unknown enemy in the future, right? Because we don't know. We don't know. So it depends on your risk tolerance. Are you okay with today's tax rates, or are you okay with future tax rates? So that's another question to consider. And the final question I would consider before making this choice is, do you need access to extra capital in this current state in your life? Because here's what happens. If you contribute your money to a traditional IRA, you can't touch that money until you're 59 and a half without penalties and taxes. If you touch that money early, you're gonna be hit with taxes and a 10% penalty. Now, with a Roth IRA, it's different. Because you've already paid taxes on this money, because you got no tax break on this money today, if you put $6,500 in a Roth IRA today and you decide you need access to money, you can take out your contribution at any time with no taxes and no penalties. So for example, if you contributed $6,500 to a Roth IRA for 2 years, right? That's a total of $13,000 contribution. And let's say 5 years from now, that Roth grows to $50,000. You can take that $13,000 contribution out whenever you need to, right? Because the contributions you've already paid taxes on. So you can take up to $13,000 out of that account with no taxes and no penalties. And if you take any more than $13,000, you're gonna have to pay that 10% penalty on that money. So one of the hidden benefits of a Roth IRA that most people don't consider is your Roth IRA can be a low-key emergency fund if you need it to be, right? Because you can take out your contributions at any time. So for me, I used to have an emergency fund of like 3 months of my expenses, which was like $30,000. And I had to keep it in cash because it's an emergency fund. I don't want to have to like take it out of investments. I don't want to take it out of the market at the wrong time and lose money. So I used to keep about $30,000 in cash in my emergency fund. But I've been contributing to my Roth IRA since I was 24 years old. So I'm now 32. So that's 8 years of $6,000 contributions. So I got $48,000 in contributions to my Roth IRA. My Roth IRA is well into the 6 figures now, but now that I know I have a $48,000 emergency fund, I no longer need to keep that $30,000 in the bank. Why would I do that? I'm like literally losing money because of inflation. So now I'm able to take that $30,000 and invest it in another account while having the peace of mind and security that I can always take money from this Roth. So in my opinion, a Roth IRA has a few more pros than the traditional IRA, but it depends on you and your situation. But now you have the information to make that decision. Okay, guys, that's all I have today, but I feel like this is an amazing class to teach you all the difference, the pros, the cons, the things you need to consider before making this decision, and I hope this helps you. If it did, hit that like, hit that subscribe button, and please leave some feedback in the comments so that I can know how to better assist you in future videos. All right, guys, see y'all next time. Peace.